Well, the GST Council meeting as we speak. This is the Council's 13th meeting since deliberations of the new tax regime began. Remember, the Parliament has now cleared the GST legislations. What is happening today in the GST Council meeting is the finalization of rules. Let's go across now to our colleague Timzi Jaipuria. She's been tracking that story. So Timzi, meeting underway, some more rules expected to be finalized today. What are you picking up?
Yes, very clearly meeting, as I speak to you, meeting is still going on, and some of the crucial rules which need a special mention, which are under discussion right now, are on the input tax credit and the valuations, how the valuations will be done once the GST regime is kicked in, and also how the input tax credit benefit will be passed on to various industries. So very clearly two important rules out of four which are under discussion right now. Also, we had Kerala Finance Minister talking to CNBC, very clearly sharing that he's going to make a pitch for a lower tax rate on bidis as against to cigarettes. Now, his presentation is likely going to talk about that once the tax rate of bidis and cigarettes is at par, this means shifting the bidi consumers to cigarettes, which could lead to higher fortunes for the cigarette companies and a job loss of over 1 crore people for the bidi industry. A big jolt for bidi industry is what he's saying this is going to lead to, and he wants bidi industry to be protected. Let's see what happens once.
All right, yes, we are waiting for the meeting to conclude, and the Finance Minister is expected to brief the media. Timzi, thanks very much. Let's bring in our panel of experts. Harishankar Subramanian, Partner Indirect Tax at EY, MS Money, Senior Director Indirect Tax at Deloitte, Archit Gupta, the founder and CEO of ClearTax's.com, all with us. Gentlemen, appreciate you joining us. Well, we're continuing our GST coverage here. Hari, rules expected to be finalized, crucial, in terms of what happens during the transition period, etc. What would you be expecting?
No, in fact, yesterday when we were interacting with the Revenue Secretary, he had categorically mentioned that the rules will be discussed today and probably may be out in public domain by either tonight or tomorrow morning, So when I heard your correspondent talking about only two rules being discussed, which is valuation and input tax credit, I'm just wondering whether transition provisions and the other rules are also being debated.
No. I want to clarify that. Those are the two rules that are current. Those are the two rules that have been taken up so far. But yes, you're absolutely right. 4 rules are going to be taken up today and hopefully finalized as well. That's what the Revenue Secretary very clearly told us.
So it's important that they come out, because rules are as important as what the laws are for industry to get ready and start looking at the fine details.
Okay, Mani, this is the concern, and yesterday again the Revenue Secretary very clearly saying that industry has no cause for concern, whether it's the fitment exercise or even as far as transition is concerned. So in specific, what is the clarity that you would be looking for?
More than clarity, I think I would be looking for the rules in totality, because when we look at the rules being subservient to the legislation, they are basically the provisions which people use on a day-to-day basis. Very large number of people who are affected by GST would be interested, I would say, possibly more in the rules than in the Act. And we have had rules on a slightly piecemeal basis in the past. So what I would be looking at the end of today's meeting is to have the rules in their entirety passed by the GST Council. The Act is already passed, and when the rules and the Act are read together, it allows people to plan their transactions. It allows people to get clarity in terms of what they need to do from now onwards as they approach GST. And that, I believe, is timing it absolutely right, because we are exactly 3 months away now. So in the 3 months, people need to read the Act and the rules and get prepared for the rollout of GST.
Yes, you're absolutely right, and the devil is in the detail, in the fine print, as we've always noticed. But let's listen in to Kerala's Finance Minister, Thomas Isaac. Remember, he's been missing from the last few meetings of the GST Council, and today he spoke with us before the meeting started and made the pitch there as far as bidis are concerned. Listen in.
There are many people who wants to have the same level of tax on bidis and cigarettes. To even think of putting 290% tax on bidi, I think is crazy. That's to say, you take the combined incidence of excise and VAT today, And now you have got rate structure. Whichever rate this combined incidence is nearer, you accept that. And once you accept that, certain modifications can be looked, but any fundamental change from the structure will have very serious revenue implications. I think we should not delay. Having taken the plunge, you better take the full bath.
Well, that's the Finance Minister of Kerala, Thomas Isaac. Sachin Menon also with us now. And Sachin, at least I think, somebody like Thomas Isaac, who was batting for the GST rollout to be pushed to September, now saying, if we've decided to take the plunge, let's go all the way, and July 1 should be the date as far as the implementation is concerned. But today is going to be a crucial day from a rules perspective. What exactly would you need in terms of clarity? And of course, we got plenty of clarification from the Revenue Secretary yesterday, but what more would you be looking for?
Well, I think mainly if you are looking at one of the issue which is very burning issue is about valuation of interstate stock transfers. How does it be decided? Because as far as goods are concerned, this could be far more easier to implement, maybe because there is a reference price which is available. But we are eager to see that whether the same yardstick, how they will be applying to services for that matter. Because service is concerned, it is very difficult to benchmark against a price for a service, a value for a service, because every service is customized to the requirement of the consumer, and very few services are is a kind of a standard kind of nature. So that is one thing to see that how the rules which is talking about valuation addresses issue is a matter of concern and matter of interest. And similarly, if you look at the transfer of the input credit, what proportion and what ratio it will be distributed when you are talking about the head office incurring all the expenses for the business in different states. How is it going to be appropriated? What is the rules behind that? That is another issue which would be eagerly awaited. If you look at various provisions which we have seen in the current law, many a cases rules rather can simplify as well as complicate the implementation of those provisions in the Act. So the rules are very important to see that we have a relatively simple rule which can be easily implemented, and we have to wait and see that how is it reflecting in these rules which are passed by the government.
Yeah. Well, we are just minutes away from the GST Council meeting concluding, is what we're giving to understand. Archit also with us, the founder and CEO of ClearTax.com. Archit, you want to add to the list of clarifications that you would need at the end of today's GST Council meeting?
I think besides the GST Council meeting giving some clarity, I think for us, number one thought process is the technology rollout and clarity in some of the questions which the technology teams are asking in terms of how to integrate with the GSTN and what happens next as the rules come out, and the implication of that on the implementation itself, as some of the panelists have mentioned. So it's basically going to be the rules and their applicability and how does that roll out into the technology aspect of the implementation. It's a completely paperless system, so the input tax credit claims, etc., will come out in the technology side. So just need to understand that on how the implementation will look like for the customer, for the people affected by GST, and then what will the rollout look like.
Okay, quick word in from you, Prateek, as well. Clarity that you would need, and also were you surprised yesterday to hear from the Revenue Secretary that the migration is only at about 60% to the GSTN, and does that concern you?
Yes, that does concern us, because I would suspect that the 60% are larger businesses, etc., who have done that. But what about the SMEs? And therefore the point that we were making was that GST should be deferred to September 1. That's definitely a matter of concern. A lot of people have tried to log in on GST and try to get the provisional registration, but because of various issues they have not been able to do. And now they've extended the date for migration to 30th of April. And I suspect that that will be extended further. So that's definitely a matter of concern. Coming back to the rules, I mean, if you look at the Act per se, I mean, there are more than 100 places where it says that, you know, it will be dealt with in the manner to be prescribed. So all of those cases will come in the rules. So I just wanted to highlight a couple of things that I am looking at. One is, you know, the clarity on how the credit for the opening stock will be transitioned. And yesterday you asked this question, I think the CBC chairman, if I'm not wrong, and the response was, yes, it will be given, but how will it be given? Because again, it says to be prescribed. So that's number one item for me. And then valuation, which Sachin has highlighted, on valuation of stock transfer, valuation of inter-office services. So anything on valuation of goods or service is something which will come, including related party transactions between employer and employee. How a transaction between related party will be treated will also come in the rules. So, but number one item is opening stock, and that I think really is very, very important.
Okay, gentlemen, stay with us. We are going to head into a short break, but as we do that, we leave you with what the Revenue Secretary Hasmukh Adia, one of the key architects of the GST legislation, told me yesterday when we spoke with him.
As of now, from the government side, we are fully ready. Now, if the businesses are saying that they are not ready, then they should tell us so. Yes, once we reach out to the trade and industry, and once they start finding out what is in for them, there would naturally be pressure lobbies which will try to hold the process, you know. So, but then we would like to communicate with them properly. And that's why I'm saying that the biggest challenge in the next 3 months is going to be outreach program for the trade and industry. Our formula is very, very clear. Fitment is a mechanical exercise. It's not going to be a big game changer, or it's not going to be changing the fortunes of companies here and there. First of all, let me tell you that it is only for a transitional period. We are certainly not hoping that this provision will be used in future also. It is only for the transitional purpose, because there might be reductions or increase in rates in the transition period only.
Well, this is a big breaking story at this hour. As we've been expecting and as we told you, the GST Council has now cleared the rules relating to composition, valuation norms, transitional provisions and ITC. So those 4 rules that were expected to be taken up by the Council and finalized today, that has in fact happened, and the next meeting of the GST Council is on the 18th and 19th of May. So there is a long gap now between the Council's meeting today and the next meeting, which is on the 18th and 19th of May. So now this begs the question of the rate fitment exercise. Let me very quickly bring in a word from Sachin Menon. Sachin, so the rules being done today, but the next meeting is on the 18th and 19th of May. I need to check on that, double check on that, but that would seem to suggest that the rates will only be known post-May.
Well, I think the general impression was that the rates will be announced last, because to avoid, one is the pressure groups making representation to etc. So if what the finance secretary said yesterday was right, that's the case, there is very little scope for any kind of representation or machinations or lobbying, because it is mechanically adjusted to the nearest rate. So therefore, and he is saying that where is the issue? Because you already know what is the rate for the current under the current regime, and the same would continue even in the GST regime with 1 or 2 rates here and there. So therefore, it seems that the government's rate is not going to be a game changer.
Sachin, sorry, the finance minister is speaking. Let's just listen in.
Legislations. So the council took up for consideration 4 new set of rules. These rules are the GST input tax credit rules, then the valuation rules, the third is the transitional provisions, and the fourth is the composition rules. Now today morning the officers had the technical meetings and some changes were suggested to these rules. So those rules along with the changes have been tentatively approved by the GST Council. The Council has decided that the final corrected draft as approved today will be put up in public so that the industry, if it wants to make any suggestions, can do so. And if any changes are required on basis of the industry suggestion, once we incorporate the suggestions, if any, then this tentative approval that we make today would in the next meeting be taken up for consideration and affirmed and become a final approval itself. We had earlier approved 5 sets of rules, namely registration, return, payment, refund, invoice, debit and credit note. These were 5 different set of rules. Now these rules had all been prepared prior to the formulation of the principal acts. Now these rules had to be partly amended and altered to bring them in conformity with the provisions of the Act, because the rules must always be in consonance with the Act. So these 5 rules, amended drafts were circulated today and a final approval was granted on the amendments which have been made in terms of the enactments itself. So today as the position stand, out of the 9 set of rules, the original 5 which we had approved have been corrected in terms of the amendment and brought in consonance with the Act. Those now become final, and the 4 new rules have been tentatively approved, will be put in public domain, and in the next meeting will be taken up for consideration. The original 5 rules had already been put up in public domain, so there is no need to do them again. The next meeting will be held on 18th and 19th of May, where besides these rules being given a final approval, the rate structures in relation to individual commodities will be taken up for consideration. In the meanwhile, the officers committee will start working on the fitment of those rates itself. So the next meeting will be, that is the 14th meeting will be on 18th and 19th of May. It will be held in Srinagar. Thank you. देखिए वो टेक्निकल नेचर के बदलाव है, आपत्ति के आधार पर नहीं है। वो है कि ये जो कानून का ड्राफ्ट बना था वो एक्ट बनने से पहले बन गया था, वैट के जो नियम होते हैं उसके अनुकूल। अब इस एक्ट के अनुसार उसको कॉन्सोनेंस में लाना, इसके मुताबिक बनाना, और इसलिए इसमें संशोधन करने आवश्यक है। थैंक यू।
Well, that is the Finance Minister. Let's quickly bring in our panel of experts. Sachin, you just had the Finance Minister there. So the previous rules, the 5 rules that were cleared by the GST Council in the previous meeting, today being amended in consonance with the legislation that's been cleared by Parliament. And today 4 rules being cleared by the GST Council, but of course yet to be finalized. Very quickly, your take.
Well, I think one thing is very good because we are getting enough time to analyze the rules and suggest if any of those provisions are missing, which is required to be in the rules. So that is a very welcome step, that there is a time period of at least about more than a month for us to respond. And also it worked well with the subcommittees which is formed. I was wondering what is the subcommittee going to do after finalizing and passing the legislation. what are they going to do. Perhaps whatever maybe those suggestions may be also taken into account when they are finally framing the rules or finally approving the rules. So that is a very welcome step according to me. So I think this is a fair development. But as far as rate is concerned, as expected, rate is not coming so early. So the only issue is that when you have to configure this in an IT setup for preparing for the GST implementation, we will have very less time to have a user acceptance test or whether it is correctly configured. This is a challenge.
Gentlemen, just hang in. We've got the Finance Minister of Delhi, Manish Sisodia. Let's just listen in.
5 रूल्स तो पहले ही फाइनल हो गए थे और वो उनको फाइनल अप्रूवल दिया है। 4 और रूल्स लॉ कमेटी की तरफ से आ जाए थे काउंसिल में, तो उनको एक टेंटेटिव अप्रूवल दिया है ताकि पब्लिक डोमेन में इंडस्ट्रीज के लिए, ट्रेडर्स के लिए डाला जा सके और उनको उनमें कहीं कोई अगर छोटा मोटा चेंज होगा तो वो अगली मीटिंग में फाइनलाइज कर देंगे।
इसमें सब सवाल ये उठ रहा है कि
रूल्स फाइनल कर
पार्लियामेंट से अप्रूवल के बाद, चारों बिल के बाद लोग ये सवाल उठा रहे हैं कि 1 जुलाई से जीएसटी लागू करने की जल्दीबाजी क्यों है, 1 सितंबर तक क्यों न चला जाए। तो क्या आप इसके पक्ष में हैं?
अगर हो सकता है तो 1 जुलाई से कर ही देना चाहिए। हम पहले से लेट हैं।
पूरी तरह से तैयार है 1 जुलाई के लिए?
बिल्कुल तैयार है।
Sir, did any state made any particular presentation on BDs and cigarettes?
नहीं, आज बात नहीं।
Well, that's the Finance Minister of Delhi. But Hari, let me come to you now. And as was very clear from the Revenue Secretary yesterday, that it is likely to more or less be a status quo as far as rates are concerned. So his constant refrain was that what are you getting so anxious about, because there is not going to be any significant change from the current rate of tax or the tax incidence currently, and then what happens once the GST rolls out. So now it's very, very clear that the rate exercise or the fitment exercise will only happen or clarity will only come in post the meeting on the 18th and 19th of May. Your reaction?
No, rates, I've always felt that this is not going to come till the last. And I've been hearing that it will come as late as even June, because it's going to be just a mechanical fitment. And yesterday you heard the Revenue Secretary in 85% cases, he said you obviously know the rate because it's your current effective indirect tax rate and will peg it to the 4 rate structures that are there. So rates is not something that's going to come, in my view, before end of May or June. But what is worrying me today is they said they have finalized or given a tentative approval for the 3 big rules, which is valuation, input tax credit and transition. Yes, they're going to put it in public domain, which is excellent, which means the working committee interactions and the interactions of the industry associations and stakeholders will be somewhere gathered into the rules as they get approved on 16th and 17th May, or what the dates that they said. But my worry is if this is going to get delayed to that extent, and these are critical rules other than those 5 rules, which means these rules finally will not be out before maybe 3rd week of May. So the question is, when will the people get ready? How will the IT systems be set right? When will GSTN start testing? With this, I'm little concerned about July 1st. Till yesterday there was always a doable scenario of July 1st. But if this is going to get pushed right up to May 3rd week or maybe even end of May and rates coming in June, July 1st now looks, I don't know what the view is, because till yesterday the sense that the Revenue Secretary gave was, oh, we are fully ready, it's the industry, if they come and say there could be a delay. But now I'm saying the rules are not there, the 3 critical rules are not there. It's good that we've got 40 days to interact, to look at the rules and given our suggestions, but then the rules are going to get finalized only by maybe 3rd week of May after the meeting. And even in that meeting, I don't know, they will finalize or they will first discuss what the feedback has been, which means you're going to push it till end of May.
The sense we're getting is, and we'll get Sapna to join us, is that the 4 new rules approved by the GST Council tentatively today are more or less approved. They don't expect too many changes. Just waiting for industry feedback is what Sapna is reporting. So they believe that it's more or less a done deal. They don't expect to see too many changes and they're only anticipating industry feedback. But Prateek, do you now share and echo Hari's concerns?
Yes, I do. And before I come to that, one quick comment on the rate of tax, and I'm not sure whether it's a right strategy to say that the rate would be closer to the existing rates. One of the reasons why we were eagerly waiting as a country for GST is that we all thought that the effective rate of tax on manufactured products at least will come down. And if that is not going to happen, and if you're saying that if the rate is 24%, it will be around that, if the rate is 18% around that, then why do we need to have GST in the country, right? I mean, so I'm not sure whether that's a right way of putting it. So I think we should take a call as to what product, what services do we want this, to incentivize and things like that, rather than looking at the existing rate. That's one. Second is, I completely agree with the comment that Hari made. I think it's going to be very, very difficult now for us to meet the 1st July deadline, because the rules are going to be out by end of May. After that, the rates will come. I mean, one of my clients was telling me today that if they want to make any changes in the MRP of the products, which is already
Yeah. Pratik, just a second. We've got with us now Mr. Gowda from Karnataka, representative on the GST Council. Mr. Gowda, thanks very much for joining us. So we are given to understand that certain amendments were brought into the 5 rules that were cleared by the GST Council in its previous meeting, and today you've tentatively approved these 4 very crucial rules. But the question our tax experts here on our panel are asking, that with the next meeting only scheduled for the 18th and 19th of May, and then perhaps we'll see finalization of rates and so on and so forth, are we cutting it too close for a 1st July rollout?
Not really. I think the logical sequencing has been fairly well thought out, and most of the rules are approved. They will also be put into public domain. And some of the additional rules which have not been put into public domain will also be put into the public domain tomorrow. So if there is any feedback on those will be incorporated and cleared by May 18-19. So draft rules or finalized rules will be in the public domain, and that should give enough scope for the industry to align themselves to the rules.
But Mr. Gowda, what we are given to understand now is that the rate fitment exercise will start when the council meets on the 18th and 19th in Srinagar, but also that you're expected to put out the new rates only at the end of June. So from an IT perspective, from a preparedness perspective, is that really going to give industry enough time? I know the Revenue Secretary has gone to great lengths to explain to us that the tax incidence is not going to change dramatically under the GST, but nevertheless, if you're only going to clarify on rates by the end of June, then is the 1st July timeline really practical?
So majority of the goods, services, commodities, the broad principles have been laid out as far as the rate of GST tax is concerned. It will only be in a few commodities that we will go into, the GST Council will go into greater depth, and only a few commodities the changes may be in the noticeable range. Otherwise, the broad guidelines for the categorization of rates has already been laid out, and that also gives the industry a fairly good idea of where their goods or service is going to be in which slab.
Let me give you 2 examples, and let me ask you to explain this to us. Now, you're saying that in certain commodities, the GST Council will look at a case whether there is a need for a reduction or a change as far as the current slab is concerned. Let me give you the example of a television set or a refrigerator. I mean, it could have been considered a luxury item in the past, but today it is an Aam Aadmi's product. It is no longer a luxury item. So is there then a case for a television and a refrigerator to come perhaps, in the 18% kind of bracket? So then we're talking about a significant reduction in rate.
So, well, yes, there are few, as I said earlier, of course, these issues will be debated. They have not been debated as yet. Commodity-specific issues have not been debated mostly. But nevertheless, yes, the refrigerator and television is an issue to be discussed, whether their slab should be lowered or not. But majority, 90-95% of the commodities will fit into an automatic rate, which is closer to the rate that is. So you may look at about 5% of the commodities where the rate upward revision or downward revision may happen. So that will also be...
Is 5% B, sir? What would fit into this 5% bracket if you're saying that almost 90 to 95% is a done deal as far as rates are concerned? Which are the commodities that could see significant changes?
It varies. Each state or the union government has its own position on some commodities, right? So, for example, my areas of concern need not be the same areas of concern for another state. So all put together...
Mr. Gowda, may I request you to just hold on for a second, sir? We've also got Mr. Thomas Isaac with us, the Finance Minister of Kerala. I'll come back to you in just a second, sir.
That came up for discussion was how lottery is to be valued. Otherwise, there was no difference of opinion. The officers have very carefully gone through each of the clauses. But still, some people did want to have a second look at it. So we had decided that to put the entire rules into the public domain. And if any comments comes in, including from the states, there would be, we don't expect anything major, minor changes, they can be incorporated.
So anything specific on valuation and input tax credits, that's something that was awaiting some clarity. Any word on that?
Yeah, it's a very complicated law because when valuation is occurred, it's always very specific cases. So, for example, how do you evaluate actionable claims and so on. So I think but fairly almost all cases have been covered. So there should not be any confusion.
So any move made by you with respect to taxation of certain items such as BDs, etc.?
We had a discussion on the BD. Kerala, with strong opinion, there's not be cess on BD. There will be GST rate on BD. Because if you put the same rate of cess on all tobacco products, BD industry will be wiped out. Even today, the centralized size, while something anything between 1,600 to 4,000 rupees for 1,000 cigarette sticks, the centralized size on BD is only 16. So now to put them on the same plane and impose the same tax would mean not the whole demand shifting to cigarette. And it's already evident in the market, the share price of ITC and so on, which have become very highly buoyant now.
So just one last question.
No, Well, that is Thomas Isaac, the Finance Minister of Kerala. Mr. Gowda, thanks very much for staying on with us. I interrupted you, but you were talking to us about the commodities where you do expect changes as far as the rates are concerned.
Yeah. So each state may have its areas of concern, and that varies from state to state. So all put together, my guess is that, it won't be more than 5% of less than 5%. In fact, a few commodities where the rates may change quite considerably. But otherwise, I think majority of the commodities would fit into an automatic category or a slab, automatic slab.
Mr. Gowda, the Finance Minister said that, the rules that were cleared by the Council in the previous meeting, the 5 rules which were cleared, were amended in some form or fashion today in consonance with the Act. Can you take us through the key changes that have been made?
No, these are actually finer points. Some of it is to align it with the Act, and some of them are actually feedback from the public, meaning the industry. So in order to, better align them with compliance requirements from the industry's point of view. But nothing major. These are minor changes here and there on finer points. A lot of details involved in that, but mostly minor changes.
Mostly minor changes. All right, sir, we will let you go. Mr. Gowda, always a pleasure. Thanks very much for joining us here on CNBC-TV18. Let me get wrap-up comments from our tax experts. Hari, you just heard what Mr. Gowda had to say there, saying that, look, more or less rates will fall into the brackets that they're closest to. This is what the Revenue Secretary told us. He still believes that 1st of July is possible, that the rules will be put up for public consumption shortly. Any of your concerns allayed?
No, I'm really, I love the optimism by each of these council ministers without realizing what the ground reality is for the industry, because unless anything is final, it's not final, which means you really can't effect a change or hard code your system, whether it's rates, whether it's rules, or even for GST and to start working and test data. So I'm little surprised at the optimism, but nonetheless, as far as rates is concerned, it's unfortunate that the rates are going to be in the way it is, but I don't think there's nothing much you can do. I think the horses are bolted, and if they're saying only 5% is going to be what's going to be the debate, what I've been hearing at least in many forums, open forums, even in CNBC events, is that he's always maintained that the goods that they will look at will only be goods of mass consumption. So I don't know whether TV sets fall into it, whether they will split TV sets into sizes. So you'll have more complications. And yesterday you heard the Revenue Secretary even mention that services will have as many as 3 rates. So you'll have a standard rate, you'll have rates of services with abatements which could fall either in 5 or 12. So it's every spice that you can think of, the GST will have.
Yeah, all right, Rohan Shah with us as well. Rohan, a quick comment from you. So more or less, the 9 rules are going to be finalized by the 18th and 19th of May. That's the next meeting of the GST Council. Rates will be known only by perhaps the end of June. 1st of July, daunting?
Very daunting. And to my mind, the earlier the government really steps up and says that it is not the 1st of July, the better. Because if that happens, then, everything else is placed in context. If it is not the 1st of July and, it's a later date, then this period of interaction till you get to the 18th or 19th of May with industry is a very good one. Because you're giving them an opportunity to make their comments. And I don't think it is worthwhile saying that, what will change is very minor. I think we should recognize that given the deep impact these laws will have, that the period of consultation is an important period. If this period of consultation is one where they will take comments on board, then even those subcommittees which have been set up have some meaning. So there is some sense of cogence to saying, here are the rules, they are still not final, we are giving you a comment period, we are meeting important industries, we will take the amalgam of all of that and then reflect that into our deliberation of the 18th. And unless they say that, I don't think.
But Mr. Shah, if you listen to what the Revenue Secretary told us, if you listen to what the Finance Minister told us, if you listen to what the CBEC Chief told us, they're putting the onus on industry, saying, look, government is absolutely ready, we're fully prepared for a 1st of July rollout. It's industry's turn to step up.
No, I completely agree, and I don't think in an issue like this, which is a national cause and a national cause which will impact us for many years, there are any trophies to be won or any badges to be won. Let us say government is ready, and let us say it is industry which needs 3 months. Either which way, this is collaborative. They can't have a law unless industry participates. So from my perspective, let's give credit to the government to say they got everything right by the dates they should have. And that can be a debate. But let us say they've got it right. And even if industry needs these 3 to 4 months, it has to be given because it's a collaborative process. Even on rates, we can say the principle is out there. But please understand one thing. Let's talk of textiles. What's the effective rate? Half the things in the value chain are not taxed today. If you talk about effective rates, Chief Economic Advisor says 7.2. Somebody else says it is 10. Will you put them into 5? Will you put them into 12? And it's a very important aspect of the consumption basket and the related index. So services, you're now saying 18, 12, 5. Where does banking go? Where does insurance go? There are issues which are obviously going to impact us deeply. This is not a race to a date. It's a race to a result. And if it's a race to a result and the result needs the government and the industry to be collaborative and participative, I don't think anybody is going to lose face if it is the 1st of September. And from that perspective, my own sense is, you've got everything out, kudos, this is a fantastic job. But give industry time, let them react, take on board what they have to say. Even for rates, it's not going to be innocuous. It will create its own amount of debate. And from as early as possible, say it will be the 1st of September, even if it is only for you to allow industry to come on board because you've done everything you should. But we can't lose sight of the fact that this is far too major to rush through. If we count the days from when they will issue the rate, let's say it's 4 weeks, let's say it's 2 weeks. Is that enough for a nation of our size to migrate? I think everyone who is important in the system has enough wisdom to know that that won't happen. So let's early enough give the time and make this a collaborative process. If the medals have to go to government, they should, they deserve them. But at the same time, we can't penalize industry because they just haven't had enough time to prepare.
Yeah, absolutely. Sachin, let me get wrap-up comments from you. As Rohan pointed out, it shouldn't become a race to a date, but it should be a race to a result. And I don't think we could have put it much more eloquently than that. Hopefully it's not going to become about a race to a date, and there will be the kind of feedback that comes in from the groups that have been set up, sectoral groups that have been set up, etc., will in fact be incorporated, and industry will be given time to make the switch over. Sachin, if the finance minister is listening, what would you say?
Well, I think I would agree with Rohan from one perspective, that what is the urgency? Urgency is that the constitutional validity of the current law is expiring on 15 September. That is one. And the second is that the elections are going to come. That is 2019, so it's closer to the election. These are the only two issues which we are talking about. Why we should not be implementing it today or 1 month, 2 months later or 3 months later. So there, from that perspective, if you look at the readiness of the industry as of now, SME sector is very clearly not prepared. If they are in a position to gear up and come online and compliant by 1st of July, the answer is it is a wishful thinking. It is not seems to be there. And therefore, whether you like it or not, the things are moving towards a situation where we won't be in a position to successfully implement this before 1st of September. This seems to be the way things are moving, because especially now rates are going to be finalized somewhere in end of May or beginning of June. How much time do you get for the IT implementation? Because you are supposed to be configuring the rates and all those related rules, etc., into the system. It will take time. And again, coming to the rate part of it, the manufacturing industry, let us admit it, manufacturing industry has been bearing the burden of taxes unfairly. 60% of the total indirect taxes is borne by the manufacturing industry, which is just 16% of the GDP of India. And therefore, they need a break. So even if they are reducing the price or even they make a little more profit, there is nothing wrong in that, according to me. So rather than looking at the political advantage or, just as Rohan said, getting some kind of medals for yearly implementation, I think we should look at little more pragmatically what would work in favor of the SSC, what would help to achieve a successful implementation.
Yes, absolutely. We'll give the medals out, but Archit, give us a reality check, because everyone's expressing concerns about the readiness as far as the SMEs go, and given the fact that we've only seen about 60% migrate to the GSTN, this is a legitimate and a very valid concern if we are looking at a 1st July timeline.
Yes, absolutely, because the extension of the deadline to April, the end of April, right, that signals one that the long tail of SMEs really need to get started. I mean, even if we talk to experts like CA firms who serve like the MSME sector, I think like what they've signaled is like the SME is not really prepared. They're not really thinking about GST at a level they should, because it will impact them. And like just coming to the points the panel was making, right, like from a perspective of understanding which rate, how does the rate go into their system system, even if they were billing on some historical system and they transition to an IT-based system, adopting it, getting comfortable with it, running like a few invoices on it as a dry run, and then onboarding themselves onto that piece. There are concepts like HSN code which relate to like certain goods or services, identifying those and like implementing that. And then the other concern like two concerns I can think of from an ERP and technology perspective. One is the intra-company interstate valuation of services, right, like which was raised by the panel, right? If you have an ERP, you'll have to configure, understand valuation, figure out the rules, and the rules follow-up has to happen. Then that has to be configured into the ERP as an event which the company needs to track and report to the GST. And the subsequent part is like there are many SMEs and in the service sector which will have presence in multiple states. Now what happens to those people, right? Like they are fundamentally not on an ERP. They may need a simpler solution, and the valuation rules, if they're very complex, it will cause a lot of grief to the taxpayer. So I think like definitely like the industry needs to be taken along, and I feel like a lot more work on education, a lot more work on transition, IT readiness, and like even just the modeling of input tax credit, for example, right? Like from a perspective of the price, right? Like everybody's talking about like 5% of the goods or services will be affected, but which 5%? And if it forms a very key part of your input, then your price may change, and then the anti-profiteering law is also there. So people have to think about this holistically.
Yeah.
So I think the industry will request for more time.
That certainly seems to be the case at this point. But, you know, gentlemen, maybe the government is getting emboldened by the experience of 811. And I'm talking about what happened on the 8th of November. Because remember, today, in fact, is the deadline for people to deposit old notes at the Reserve Bank counters. It's a scramble, in fact, for exchanging gold notes at the Reserve Bank offices. The deadline for depositing and exchanging gold notes of 500 and 1,000 rupees ends in a few hours from now. Remember, the Prime Minister in his speech and had said 31st of March is the last day for depositing old notes, but this is now available only to people who can prove that they were outside of India before they returned on the 31st of December. Now, our colleagues have filed these reports from the RBI headquarters in Mumbai. Let's just take a look at the scenes.
Well, it's just hours before the deadline for exchanging the old 500 and 1,000 rupee notes expires, only for those Indian citizens who can prove that they were outside the country between the 8th of November and 31st of December, which was the last day for depositing old notes for all Indian citizens. Here at the Reserve Bank of India headquarters, there's a snaking queue on the very last day, that is March 31st, with people with their passports trying to go in and exchange their money. But for several others who had some sort of miscommunication or were not aware of the fact that their money will not be exchanged after the 31st of December, also here in lines and very disgruntled. The anxiety is quite palpable among the crowd here.
ज़्यादा पैसा नहीं हमारे पास, 2,000 4,000 यही 1,000 पैसा है. ये नहीं है कि हमारे पास 50,000 है. इंक्वायरी करने के लिए सब खड़े हैं, हम जवाब देने के लिए खड़े हैं.
मुझे ये बताइए, अगर ये लोग मैंने यहाँ पर ये लोगों ने पैसा लिया नहीं, हमने घर में रख दिया 1 लाख 2 लाख, अभी रेट उन लोगों ने पकड़ लिया तो गुनाह होता है. मगर हम जब डिपॉजिट कर रहे हैं वो भी नहीं ले रहे हैं, तो हम कैसे घर में रख सकते हैं उसको. तो अभी प्रॉमिस किया, जो भी नोट का है 500 है तो 1,000 रुपीज़ है, वो प्रॉमिस किया है. और दूसरा मोदी ने 31st को बैंड किया है और 31st मार्च तक का भी RBI में एक्सचेंज होगा करके अनसर्टनली सब बंद कर दिया है लोग ने.
मेरी बीवी का डिलीवरी था, उन्होंने पैसा रखे थे अलमारी में उनके लॉकर में. अभी पाड़वे के दिन उनको घर में लाने के बाद मालूम हुआ कि उनके लॉकर में पैसा निकला. मैं बोला चेंज करने के पुणे गया. पुणे के बाद वहाँ RBI वाले क्या बोले, मुंबई जाओ, वहाँ चेंज हो जाएगा. पुणे से फिर रात में यहाँ VT स्टेशन में सो के यहाँ आया. यहाँ आने के बाद बोल रहे कि वह NRI है क्या. अरे क्या NRI लगे, हिंदुस्तान है ना.
After today, if Indian citizens are found holding more than 10 notes of the old 500 and 1,000 rupee denominations, there could be a fine of upwards of 10,000 rupees or more. So looks like many of the people who are who've been standing here in line for a long time may just have to go home disappointed.
Well, today the deadline, and you know, people helpless there outside of the RBI counter in Mumbai, and of course similar scenes playing out across various parts of the country. Gentlemen, there's a reason I played out that report for you, and let me start by asking you, Prateek Jain, you know, we're talking about the 1st of July. Yes, everyone is trying to make the efforts to ensure that 1st of July is indeed met, but we don't want to be saddled with scenes like what we just saw outside the Reserve Bank.
No, absolutely. I mean, I think government must give industry some more time because we were expecting the rules to be finalized by end of April. Now it has moved to end of May. I just want to make a couple of points. One is effective tax rate. I think the importance of determining the effective tax rate and the bucketing is being undermined. You know, you see a situation today, different states have different VAT rates on products. For example, in one state fertilizer could be exempt from VAT, another state fertilizer could be subject to 5%. So is the case for IT products, food products and so on. So how do you compute this effective tax rate? And different states will have different voices. It will not be easy for the GST Council to finalize the rates in a hurry, right? And if rates are not finalized, how do you expect me to comply with the anti-profiteering clause and other clauses which gets effective? Some of my decisions on the pricing, I mean, someone was telling me that if I have to change the price for the MRP of the existing stock lying in the distribution chain, I have to, you know, I need 3 to 4 months for that, right? What happens to those sectors which are currently not subject to any tax, like healthcare, for example, or print media? If tomorrow government wants to have 5% rate on print media, which is sale of newspaper, etc., you know, that sector is going to come to the GST for the first time. Right? So will they, I mean, how will I make changes if I only get 1 month before I know that whether I'm taxed or not, right? So, and also in the IT system perspective, I think Hari made a right point that unless the rules are finalized, I can't make a configuration changes. I can say option 1, option 2, option 3, but I can't make those final configuration changes. And therefore, I think government, when it say that it is fully ready, unless the businesses are ready, government can't be ready, right? So I think they should definitely look at 1st of September as a deadline, and they should engage meaningfully with the trade and industry over the next 1.5 months before rules are finalized.
Okay, gentlemen, wrap up comments from each of you, and Rohan Shah, let me start by asking you your pitch to the Finance Minister.
Sir, very simple. That high time, having done all the wonderful work on the constitutional issues, all the wonderful work on the rules, some amount of generosity in terms of time is imperative, and the earlier you announce it, the better. So what date will you announce that we are moving away from 1st July, and what is the new date would be my question to him.
Okay, Sachin?
Well, I think perhaps one should rethink about it, whether achieving a date, target date is more important, or achieving the useful or practical implementation, successful implementation more important as far as the country is concerned. And that would perhaps give more mileage to all those good work which you have done. And perhaps I think that is one thing which the minister should consider.
Mani, over to you.
I think the rate fixation exercise is being overly simplified, and I also heard quite a few people mentioning that it would be a mechanical exercise for 95% of the products. Now, in a country which has got 29 states and states have got various rates applicable to products, I certainly don't think it can be done on a mechanical basis. And whether we look at products which would be getting taxed at 18 or 28 or at 12, it would be far from a mechanical exercise, and I would say it is an exercise which has to be done at a pretty granular level. So my ask in this whole process would be that once the rates are known is the time when a lot of businesses will start getting prepared. We have also heard people saying that an outreach program is being taken on a war footing from 1st of April. Now, with the outreach program that is there, the first question that any business would like to know, what is the rate at which I am going to be taxed? Because bear in mind that we are talking of indirect taxes, which in many cases, especially in cases of B2C supplies, are embedded in the price of the product. So since the tax is very intricately linked to the pricing, and the pricing is related to the demand and supply, it is very necessary that this is something which gets announced very quickly. One view that I have is possibly there is a misconception that in excise on budget day the rates are announced on typically 28th of February, and the rates come into force from 1st of March. And this has been the practice for many years. So possibly there is a misconception that the rates can be increased on a one-day notice basis and people will be able to adjust to that. But that is not the present situation that we have today. And with so much of good work that has gone into making GST a reality, if we want it to be successful and if we would like the country to benefit from it, possibly we need to announce the rates sooner rather than later.
Well, sooner is the ask and the hope, but at this point in time it doesn't look like it's going to be sooner than perhaps the middle, if not the end of June. Mani, Sachin, Mr. Shah, Hari, Pratik and Archit, always a pleasure. Thanks very much for joining us. But let me just point out, gentlemen, it's not just the last day to exchange notes, it's also the last day to sell BS3 vehicles, and auto manufacturers are raining discounts to clear out their unsold stocks. Dealers and regional transport offices across the country are seeing a rush as consumers make most of the steep discounts. Jude Sanif brings us this report from a Honda showroom in Chennai.